Go traders, let's break down this gold trade I took using top-down analysis. So I got the logic of this trade from the daily time frame. So on the daily time frame, we had gold in this zone. We had gold in this other block right here. We had gold in this other block right here. So we are expecting confirmation for the sales to happen on the lower time frame. So on the daily time frame, you can see that after price tapped into this, Tuesday's candle swept the high of Monday's candle, which I've marked out over here. So after sweeping the high, it was only logical that I would expect Wednesday's candle to come and break the high of Tuesday's candle, which happened. So after Wednesday broke Wednesday, I was expecting Wednesday to break the low of Tuesday's candle, which happened. So after Wednesday breaking the low of Tuesday's candle, since we were looking at the market to go bearish from this point of interest, I was also interested in seeing today, which is Thursday's candle, also come and take out Wednesday's low. So this Wednesday's low. So I marked out, expecting price to take it out and continue moving to the downside. So on the 1 hour time frame, you can see that after price swept this high, we had this change of character to the downside, and then price came into this zone and dropped. So after price came to this zone, you also gave another break of structure to the downside, which I've marked out over here. So let me label this break of structure. So we had this break of structure, and after this break of structure, we are expecting price to retrace into any point of interest and continue falling. So you can see that price gave that retracement over here. Let me mark this out. So price retraced to this zone over here. So after price mitigated this zone, started falling, I was expecting that since price has mitigated this zone, price will come down and take out the low, the last low that was created before going to mitigate this zone. So today when I came to the charts and price was already moving away from this zone, I was in the 3 minutes time frame. And then I found this entry opportunity. So on the 3 minutes, you can see that price was dropping aggressively to the downside. We had this break of structure right here to the downside. So break of structure. And don't forget that this is the target that we were looking at, this low. So we had this break of structure down to the downside, and then price came back to mitigate the other block to continue moving to the downside. So after this mitigation, I was still looking at price. After this mitigation, we saw price creating a series of other blocks in this movement. So I go to the chart. I saw price after it had this minor movement to the upside and broke structure to the downside. So I took my entry from this level right here. With my stop above the high it created, targeting a 1:5, and then boom, market moved and hit my take profit. So you can see that our take profit was not exactly on the target, because the target would have been a 1:3, but I mostly like to go for 1:5. So I decided to extend my TP a bit further down, which can be risky sometimes, but I decided to do it, and price came and took me out for a 1:5. So this is a trade we took on gold today.